Hi everyone, Matthew here with Forex Nation. I'm going to go over a quick example trade setup that I did earlier today and kind of explain how I arrived at it, how I put the indicators into my chart, and yeah, I hope that it explains the system that I use, which is a very visual and very basic system, a little bit better for you. So price action started off the week way up here above where it had actually closed on Friday. And anytime that happens, that's called a gap. And a lot of the time, you're going to see that gap closed. What that means is price action is going to come back down or up, depending on which direction the gap is going, and close it, meaning meet about the same level before continuing in whatever that week's direction is going to be. And you can see that happened here. I didn't actually trade that. It's a little bit more risky because you can see things did go against you initially, but this would have been a great area to sell anyway, because of the gap and because it was overextended on our envelopes. And this envelope is according to my hourly chart that I usually read the envelopes off of, and as you can see, it was overextended by a long shot on the hourly envelope. If you can see it there, that's the hourly envelope. It's way up there. So that would have been a good sell, although I don't ever trade on what's Sunday my time, when Asian markets are actually open. It's still Sunday, and I don't trade on Sundays. So I didn't make that trade, but you could have made that. That's just a quick little tidbit there. Let's get into the trade I was talking about. The market's moving sideways. It's very frustrating when that happens. My moving averages don't work real well. They braid, which just means they cross continually and have fake outs and everything like that. Ranging markets are hard to trade. So I sat on the sidelines all day Monday. And then today, which is Tuesday, I this morning finally had a trade work out for me. I want to show you how I did. I used trend lines for it. The first trend line that I already had set up going into the week was this one, and I just move it each time the price action makes a lower low. I move it. So initially the trend line was here, which is really steep. You want your trend lines to be about 45 degrees. If it's this steep, that's a bit too steep to consider it a strong trend line. If it's not steep at all like this, you wouldn't want to really consider that a strong trend line. About 45 degrees, somewhere right in here is good. And so each time it makes a lower low, I use that lower low as movement for my trend line. So I had my trend line set up right here, and as we zoom in, we can see that even though the markets are moving sideways, even though they're ranging, they are making a little bit higher highs and a little bit lower lows. So I can kind of put a channel together with that. What a channel is basically trend lines that parallel each other. You could have used this point or this point. I used this one, and I connected it to the same low point that I used for the earlier trend line. You could have used this here, but let me just show you real quick. Depending on what you use, notice this degree of change in my line. It changes quite a lot depending on which one I use. I chose to use this one because let me show you the upward trend line that I used to complete the channel. And I like the looks of that. That looks like, look at the channel appearance here, where these lines are pretty much running parallel. Nothing's perfect. This is Forex trading, folks. Nothing's perfect. But everything looks to be good there. So I've got my channel set up. I'm waiting for price action to break that. And here's the channel again. And here's the trend line. Okay. And we see the trend line get tested here and here, and then finally get broken here. And we also see a crossover happen here. So that's two good things I got going for me. And then finally, the channel, which was my last thing to watch for, my channel gets finally broken on this one. And when price action comes back up, so I enter here when it's broken here in this area, it comes back up to test it, and as you can see, it hovered above it for a little bit, but it finally gave way to the momentum. And what I used to gauge the momentum is, again, there was three things used in this trade. The first thing, don't get these lines mixed up. Here's the bottom of the channel, and here's the main trend line. The first thing is the main trend line's broken. I didn't enter on that trade, though. I waited for the crossover. Once the crossover happens, I consider that a little bit more important. Even though we are in a ranging market, I take more weight off my moving averages when we're in a ranging market. So you have to use discretion. You have to know what kind of market you're in. but there was a considerable distance between these two moving averages, which indicates strong momentum. So I was just going to wait for one more thing, and that would be the break of the bottom of the channel line that I put in there, which finally happened here. Once that happened, yes, price action did go against me initially, and that's like a knee-jerk reaction when new lows are being created. You're going to have banks buying on the dips, but selling pressure, fundamental forces give way. We have three things going for us. We have the crossover, we have the break of the trend line, we have the break of the channel. Those things are going for us. Price action could not continue to rally up. It fell like a rock, and I netted some good profit there. Looking into tomorrow, I don't think that we're going to see this thing fall any further. It's probably going to go ahead and go up because I think there's more strength in the euro, temporarily speaking, and I think we're going to see the bulls take back over, and this thing's probably going to rally back up somewhere around the weekly R1 perhaps, but who really knows. I think I would just watch these levels, the 35.22 level that I have for the highest high it's been able to make this week before really dropping off sharply, and then this is a previous week line of resistance to watch for 35.67, which is dangerously close to the weekly R1. So anytime you see price action approaching so many lines of resistance, you can expect to see a battle between the bulls and the bears, and I got to tell you, the bears definitely have the upper hand right now with the euro. The euro is weak, so watch that. All right, I hope this helped. Thanks for watching.